Online partner Domain B.
I thought this year's budget was a bit of a disappointment. It was short on several key vision items that we were hoping this government would use this interaction to lay out, especially after the Prime Minister indicated in his televised interaction with media editors that wait for the budget, we hope to restart or kickstart the reform process in that. And I'm not sure how much they've achieved within that, with the exception of the one notable item of a direct cash transfer of subsidies. That again is currently under study. But that's my takeaway. You're here to hear the takeaway of our esteemed guests. So let me start first with you, Mr. Mulkambi. You represent industry on this panel, and I'm keen to know what you thought this budget delivered.
Well, I think as a statement of good intentions, it's a very positive budget. There's a lot of promises that have been made. A lot of them are not glamorous, things like GST implementation, cash transfer of subsidies. I think these are great ideas. They're also ahead of the curve if you compare countries which are in a similar phase of development. So if you could just implement that, that will be much bigger than any mega announcement which creates a wow factor on the day of the budget. And the second thing is on the subsidies. I mean, food subsidy is something we track because being from the sugar business, and some of these numbers, we would love for the government to really achieve those numbers, because in the past, you've exceeded these numbers by a fairly large amount. So that's the other doubt that we have in terms of, if you don't achieve these numbers, you're obviously going to deteriorate the fiscal situation even more.
The big worry is that if the math doesn't add up at the end of the year, then, what is this budget going to result in, and what will it mean for corporate India? Because it will mean a much larger market borrowing than we anticipate, more than the 3.43 lakh crores that he's spoken of. And, in that case, then, is that going to fuel inflation? Is that going to crowd out corporate borrowing? What's going to happen?
Yeah, absolutely. I think we are already feeling an effect on borrowing rates. I think interest costs have gone high just at the time when I think corporate India is ramping up investment after the global financial crisis. So we are into a new investment cycle, into a new M&A cycle. And just at this moment, we see hardening interest rates, less availability of capital. And also, on the inflation side, the worry is that India, we are not in a very good position to really tackle the sources of inflation, which is primarily oil and food, both of which I think don't have very many short-term solutions internally in the country.
What do you make of his focus on infrastructure?
No, I think, as I said at the start, the test for me as an investor and a businessman is really how far these are implemented. I mean, in power, for example, it's not that additional 2.5% of excise duty or custom duty relief, is how fast approvals come. And that is getting more and more complex and complicated. And we also have a kind of rewind. So you have decisions taken with retrospective effect, decisions that are reopened after they're given. So all this creates a lot of uncertainty, and I think removing that is much more important than the fiscal, Of course, I mean, no businessman, no industrialist would like to run away from any incentive given, but I think those are probably more important now to get the infrastructure animal kick-started.
C.A. Gupta, we were not really anticipating any big changes on the direct tax front, and yet, small surprises like this minor reduction in surcharge has to some degree helped, though I'm sure that, SEZ developers are crying that that's been offset by the increase in MAT, so to speak. What do you make of what he's done on DTC? Has it met your expectations?
Absolutely. I think given the fact that DTC is eminent now from 1st April 2012 and the way he started his speech, that there is very little he has done on the direct tax front.
Right.
But having said that, there were a couple of surprises in terms of the one-time window for dividend repatriation and the amendment on the SEZ, given the fact that you have the DTC and when you are taking away the tax holiday for the SEZ, there was no reason why that provision was required to be introduced for 1 year. And then again, you have this other, of course, benefits on the infrastructure debt fund, as you mentioned.
Right.
But overall, yes, there are some positives and some not so much positive on the direct tax fronts overall from the budget.
Let me talk about the negatives first. Why are SEZ developers complaining so much about this MAT levy, considering that this MAT levy was anyways going to become operational when the DTC came into play next year?
That's right, because you see the amendment in the Income Tax Act actually came from the SEZ Act, which was driven primarily by the Ministry of Commerce. And therefore, given the promissory estoppel that they had, in the sense that there will be no minimum alternate tax levied until the DTC comes, and that I think was the representation made by NASSCOM as well, and therefore you have the window of 2014 even in DTC. I think that was something which they were taken by surprise, for the reason that because you are levying MAT on the developers, the real estate cost will going to increase on the SEZ, and therefore probably there could be an increase in cost of the services that the SEZ will provide, and especially on the units which work on a cost plus basis, there could be a bit of a challenge in the competitiveness which they may then have in the global arena.
Okay, and do you think that IT has really got it on the chin this year? Because many people were anticipating that maybe the export incentives would be extended for one more year, considering they fall off if the DTC comes into play next year. That hasn't happened, and yet this MAT levy on SEZ developers has happened, and several IT companies are very unhappy about it.
That's right. Actually, you see, STPI entities as such were quite prepared in the fact that the government had made it clear that there's not going to be an extension of tax holiday. But the last couple of press reports in a couple of weeks back did raise some hopes that the 10A extension may come for another year.
It's come for power.
It's come for power, it's not come for mineral oil, but that has not come for...
He extended the incentive for power, but he hasn't extended it for export incentive.
That's right. And if that had come for one more year, probably the STPI had a leverage to have it grandfather under the DTC as well. Right. But because it has not come under the current act, they have no window open to grandfather that under DTC as well. And the point on the SEZ, of course, is that if you see the economic survey, that has clearly brought out the fact that if you take April to December 2010, the SEZ portion of the exports roughly constitutes 30%. And even under the global recession, our SEZ exports have done significantly well. So there was no real reason why they should have been withdrawn or given a MAT should have been levied for this just 1 year.
Do you believe that since CFC comes into effect next year, this 1 year we will see large amounts of dividend income being repatriated into India, as some people have analyzed?
I think one will still have to wait and watch as to how one reacts to these provisions, because there are a couple of aspects to these provisions. On the positive side, yes, you have a flat rate of 15% being levied, but then there's no deduction for expenditure. So if you get enough credit for the tax withheld in the home country, or if you have any opportunity for an underlying tax credit and you are tax neutral, yes, then you might as well bring your foreign dividends. But on the flip side, if you have a significant leveraging done for your overseas investments and you have a lot of interest expenditure which you could have claimed as a deduction otherwise, then I don't know whether you may want to bring that, because you will probably be in a situation then paying tax at a flat rate without a corresponding deduction. So it will probably vary on the structure which one has used to make these investments outside.
Mr. Murkumi, how are you looking at the fact that he's reduced the tax rate and thereby encouraged Indian companies to get their foreign subsidiaries to bring the dividend income back into the country?
Well, speaking of ourselves, we are in investment mode. Okay. So we see a lot more capital going out to our Brazilian subsidiary, especially in the next couple of years. But it's comforting that it's a kind of level playing field with dividend that is earned domestically from domestic subsidiaries. So in that sense, it's good. I think, probably simplify corporate structures when you are investing overseas.
There were interesting questions on tax regarding foreign investment in mutual funds here. And so I'm asking you whether you think that many foreign investors who are not already coming through the registered FII route, the sub-account route, the P-note route, will be interested in bringing their money into this country to invest in mutual funds, not just from an India investment destination point of view, but more importantly, are there likely to be tax googlies in this?
Well, you see, there is no separate provision for taxation of this which has been provided, so one has to go by the existing provisions which exist.
So if they sell those units and want to take their money out, will they have trouble?
Not really, because by and large, these investments will all be in equity schemes, and if they sell those units which will be subject to the securities transaction tax, and if they've held it for more than a year, then they're absolutely tax-free, and if it's held for less than a year, then they could get taxed at a concession rate of 15%. So probably this will be an indirect way where they could trade on the stock exchange as well through the investments in the mutual fund.
So as far as direct taxes go, if I was to ask you to score where this budget, sort of ranked between 1 to 10, what would you give it?
Well, I think given the overall some positives and some not so much positive, it will probably stand between 7 and 8.
Did he signal strongly enough with regards to the arrival of GST, at least in the next year or so?
पैसों से खिलौने खरीदे जाते हैं, दोस्त नहीं। क्या दिल से किसी को गले लगाने का कोई बिल होता है? क्या कोई अपने यार से पूछता है कि भाई एडवाइस कितने में दोगे? कभी किसी ने हाथ से खिलाने की फीस मांगी है? एक इशारे पे दौड़ के आने की, सालों साथ निभाने की क्या कीमत लगाएगा कोई? रिश्तों को पैसे से नहीं तोला जाता। इसीलिए तो IDBI बैंक ने चार्जेस हटा दिए हैं सेविंग्स और करंट अकाउंट्स के लिए। IDBI बैंक, क्योंकि आपके पैसों से बढ़कर हैं आप।
हेलो बबलू, इट इज द आउट और नॉट आउट?
छक्का।
मजाक मत कर यार, जल्दी बोल, रन आउट है कि नहीं?
क्या रन आउट? छक्का था। सो मत, मोहाली में लफड़ा हो जाएगा।
मोहाली? अबे ये ढाका है ना, ढाका है ये।
और मैं तो मोहाली का मैच देख रहा हूँ। हो गया ना गुगली?
और मेरा मैच?
वो तो रिकॉर्ड हो रहा है टाटा स्काई प्लस HD पर, साथ में बैठ के देखेंगे।
और डिसीजन?
रिटायर्ड हर्ट।
कौन?
तू।
नया टाटा स्काई प्लस HD, पॉज रिवाइंड 600 घंटे की रिकॉर्डिंग और HD क्लैरिटी। मतलब इसको लगा डाला तो क्रिकेट जिंगा लाला।
ब्लडी बबलू!
Let me then shift focus now to Prashant Deshpande on indirect tax. Did he signal strongly enough with regards to the arrival of GST, at least in the next year or so?
I think he did, because he has done what he could do. You see, he has made it very clear that while DTC is something that he can bring, he needs equal share of agreement from the states to bring in GST. And since he cannot alone put a date to the GST, he has refrained from doing that. But he has given us a heads up on what has been done. And what has been done is significant. He says that we are quite close to coming to an agreement with the states on issues which have been debated over the last few months.
Prashant, let me rephrase my question. For instance, I got two very different opinions on this question of, did he strongly signal the arrival of GST? Some people told me that, well, if he had rolled back excise, the cuts, the stimulus that he provided, then that would have been a strong signal to GST, because that would have aligned the rates closer to 16%. Others told me that no, but the central part of that 16% would have to stay at 10%, and therefore the fact that he kept excise rates at 10% is a strong signal to GST. Can you explain to me where the rates should ideally be for him to signal strongly towards GST?
I would go with the latter view, for the simple reason that today excise is levied on the manufacturer's selling price. And if you say that a manufacturer adds about 40% to what his, to the final selling price on which GST is going to be levied in future, because the entire value chain is going to be captured in the GST, you work backwards and you will arrive at us between 7 to 8% as the effective levy of the excise on the retail selling price. So the 8% levy that he is talking about on most of the goods is a reality at 10% excise duty rate today.
But if the states play ball, then are we headed towards the implementation of GST?
I would strongly think so, because he has given the pointers. Firstly, he said that the draft model legislations are a work in progress, and I reliably understand that it's been drafted and kept ready. Based on what comes in the Constitutional Amendment Bill, they will roll it out. And in any case, it cannot be rolled out unless the Constitutional Bill is accepted by the states. So those, and I hope again that it is the bills are made available little ahead of, the date of implementation of GST for us to be ready with whatever changes are required to be made. That is one. Secondly, he has talked about the IT backbone.
Yes.
And a very, very encouraging sign that by June 11 states are going to have a GST portal. And thirdly, and a very important signal that he has given is he himself has not gone out and said that April 2012 is the date I am looking at. Instead, he has given a clear guideline as to what we are ready with, and once the states come on board, we will be in a position to roll out the GST.
The one positive you wanted to also talk about, Prashant, in indirect taxes was the self-assessment for customs. How big a move is that?
I think more than the revenue implication, it has, we talked about infrastructure being a bottleneck here. What the current method of assessment of every shipping bill or every bill of entry does is it holds up the cargo from clearance, faster clearance. And by introducing a self-assessment scheme, he has enabled efficient utilization of the existing infrastructure. So, it is equally important as adding infrastructure.
Sure.
And that is why I feel that it is a very important and a very correct step and a very right step which has been taken, which will, it will free the already overburdened customs administration from assessing every bill of entry and every shipping bill.
Do you believe that he has made a good bet on tax revenue buoyancy, or is this bet going to backfire on him?
In light of the financial climate that affected nearly all economies around the world, financial management has gained new significance. To identify financial institutions that are managing their portfolios and creating value for market participants, MCX presents CNBC-TV18 IBFA, India Best Banks and Financial Institution Awards, recognizing institutions that have managed their finances while maintaining growth and creating value. Coming soon, only on CNBC-TV18.
Presented by MCX, Knowledge Partner KPMG, Magazine Partner Outlook Profit.
And what else?
You know that
Mom,
party? Huh?
my eyes are hurting.
What do I do? Mobile, games, computer? He's always in front of screens. His eyes are going to hurt. Not anymore. Because here's the new Oneida Eye Care LED TV.
The new age Oneida LED TV with unique eye care technology. 99% protection from UV rays. 95% reflection free. 10 times tougher than normal LCDs. Oneida Eye Care. The future of LED TV is here. Oneida.
Will Budget 2011 make the impact Indian exporters need? Catch A.B. Ravi in conversation with industry experts on their expectations from the Finance Minister. DHL and CNBC-TV18 present Budget 2011, What Exporters Want, at these times only on CNBC-TV18.
Brought to you by DHL.
Oh, excuse me. Hello.
Hi Steve, this is Aditi again from Global News. One last thing, if a stranger approaches a player and starts fishing for some pitch information, what would you advise him to say, sir?
I'd advise him to say no idea. Then that person will get the message.
Sorry? Your voice is cracking, sir.
I advise you to get idea.
Sorry, sir?
Goodbye.
6 champions, 1 idea to keep cricket clean.
Clean idea, mate.
Mr. Ranina, give us a broad sense, because like I pointed out in the beginning, he's betting very big this year on buoyancy in tax revenue. And if that doesn't come through, then really speaking, this budget will be remembered as probably one of the worst budgets, because all his targets will be unmet, so to speak. What do you make of that bet? And do you believe the changes that he has made in tax are going to help deliver that buoyancy?
See, Menka, there are 2 issues involved in this aspect. This budget, as you see, is more towards fiscal consolidation. And as you rightly pointed out, he's betting on revenues. What are the revenues he's budgeted for? If you look at his budget figures, it says 9,26,000 crores is all the revenue which is going to collect from customs, excise, corporate tax, income tax, wealth tax, etc. That's about $200 billion roughly. Whereas the single largest corporation in the world earns $450 billion. So what the government of India really gets is peanuts, frankly.
Right.
And they have not made sufficient effort to get that money. Of course, it's a question of balancing it with growth. You can't affect growth. That's why I said, though Rangarajan committee had told me to roll back the stimulus, I've kept it at 10%. I've not rolled it back. I think that's a very positive sign, which we should take at. He has also suddenly said huge amount will be given by way of capital expenditure under Section 35AD for a new fertilizer plant. Now that's a very big investment and a very big measure which he has taken. Right. Anybody setting up a new fertilizer plant, it's a very capital intensive project, will get 100% deduction for the capital expenditure in that. And of course for housing, affordable housing. So that will also generate more employment. As you know, housing is very, very employment oriented. So these are 2 or 3 important points, apart from giving those SOPs for senior citizens, making it 5 lakhs and things like that. Now, more importantly, what he has done is to collect revenues through these international tax, the whole gamut of international taxation. A very, very, I would say, draconian provision is introduced in Section 94A, where an Indian enters into a transaction with a person resident in a jurisdiction which does not cooperate with the Indian government.
Yes, and he's promised to put together a toolbox
to deal with such. That toolbox says that the full amount will be taxed at the highest rate, that no deduction will be allowed unless the person gives a commitment or authorizes an income tax officer to ask questions to that party. Now it's a step in the right direction. But one thing which I would like to mention is that he has forgotten that there is a lot of black money in our own country. Why not deal with that pool of money which is in your own backyard?
Now, how are you hoping that he would deal with it? Don't say
no, let me explain to you. I'll give you just one illustration. Take the case of gold. This year, in spite of soaring gold prices, today it's 20,000 per 10 grams. 750 tons of gold has come into India, according to the World Gold Council. According to the World Gold Council, the total amount of gold held by the people of India, nobody knows the actual figure, but varies between 25 to 27,000 tons of gold. Now, today we have a wealth tax, 1% on over 30 lakhs. All these years it was 1% over 15 lakhs. How many people declare the gold and jewelry for wealth tax? Now, if you just multiply this figure which I've given you, even 1% can give you something like 20,000 rupees by way of 20,000 crore rupees by way of wealth tax, whereas what is budgeted for is 635 crores.
So, considering that he has kept the key headline rates unchanged, he hasn't done as much as you anticipated in widening the base.
Yes.
Do you believe that he has made a good bet on tax revenue buoyancy, or is this bet going to backfire on him?
No, I think he's made a good bet.
Because now the bet is entirely on growth, that the economy will grow at 9% and therefore there will be buoyancy.
And let me tell you one thing. One of the reasons why the fiscal deficit in India has always been kept under some control is that the expenditure which is budgeted for is rarely spent.
Yes, absolutely.
So normally they make an adjustment in that and make sure that the deficit is according to that level.
So how would you rate this budget then?
Well, I would say, looking at the circumstances in which the finance minister has presented this budget and looking at all the options, I would give it an 8 out of 10. He has done a fairly good job. As far as amendments to the direct taxes are concerned, why should we complain if he has not made many amendments? In fact, I'm happy that there be some stability in the law. Why should you keep on making changes?
Yes.
Changes do not mean improvement. So I think that if you see this finance bill, it's one of the shortest finance bills I have seen in the last 20 years.
Okay.
And there are very few amendments. Of course, it's given some greater incentive for, scientific research.
Yes.
And then there's fertilizers, housing schemes. So some of the good provisions are there.
You know, in the last 5 or 6 months, there has been a sense of despondency within business. I think the broader environment seems vitiated by all this conversation regarding corruption, governance deficit, issues that, plague implementation, stability, certainty, all of that. Do you believe to some degree that this budget has helped reduce that sense of despondency? Has it left it untouched? Or has it worsened it by not offering any vision statement or guidance?
Well, firstly, let me say that, a lot of the uncertainty has been mainly around the infrastructure sectors which engage with government for
all
allotment.
The natural resource sector.
Absolutely.
Right? Yeah.
So for people like us in primary, in agri, business, etc., it's not been that bad as for some of the infrastructure sectors. Okay. For us, the bigger worry are two. One is interest rates, and secondly, the corresponding effect it's had on capital markets and the general feeling of positive growth that we've enjoyed in India for the last 4 or 5 years. In terms of this budget, is it a breakthrough budget in that sense? I think not. I do think it speaks of some very solid measures and intentions, and if they're even half implemented over the next 12 months, I think we will look back and say this was a good start.
Right, gentlemen, thank you very much for being a fabulous panel. Prashant Deshpande, C. Gupta, Mr. Murkumbi and Mr. Anina, thank you very much for your time.
Presented by Deloitte. Online partner Domain B.
1, 2, 3, 4, 5, 6, 7.